Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Balanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to getretiredstayretired.com. And now, here's Craig Balanos.
Hey, good morning and happy Sunday. We're back at it. We're coming to you to give you sincere and actionable ideas that you can use to improve the lives of yourself and your loved ones financially. I'm tired of seeing Americans just survive retirement. I need to make sure you're going to thrive in retirement, and that's going to mean you're going to need to hire a dedicated team, a set of multidisciplinary specialists coming together to create a family office, not just for everyone, but for you and your loved ones. Our number, 833-964-PLAN. That's 833-964-PLAN. Wants you to go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. Okay, back by popular demand, we've got Jean Osman, long-term care guru. She's in the studio. Well, she's actually broadcasting remote from Free Florida. Yes, that's affectionately what I call the state of Florida. I call it Free Florida. And Jean, it's such a big deal for me. I'm really getting the message out there throughout the duration of 2025 that long-term care, continuity of care is the avalanche issue in American financial planning. Just share with our audience a little bit about the general concept, why this is something that is so personal for you. All of us have our own story, and then walk with me as we lead through a series of Q&A that's going to inspire our people to make sure they too have a plan.
Sure. Craig, it's personal to me because I watched my family go through it. I watched my grandmother lose everything to a nursing home, and I watched what that did to her spirit. I don't want to see any other family go through it. And at the time, I thought to myself, if I can dedicate myself to keep other families from going through what my family is going through at this point, that's what I want to do with my life. It was disheartening. It was heartbreaking. And I think her heart broke at the end of the day, knowing that really she had spent her life saving every dime that she made over her lifetime to leave a little something to myself and my sister. And at the end of her life, she was unable to do that because the nursing home took everything. And she ended up on Medicaid. And that's just not how I want to see anybody end their lives.
That's right. We've got to protect choice. This is a personal thing. You've already experienced it in your family, Jean. I've seen it with my mom. Many of the listening audience, it's touched them as well. The problem is no one knows how to solve for this thing. But you know what? I'll bet you, while no one knows how to solve for it on their own, we can solve for it together. And here's where this starts. When we talk about long-term care, it's going to affect a lot of us. No one wants to acknowledge it, but Jean, out of how many adults, I mean, it's affecting what? 1 out of 2, 1 out of 3? What are we looking at these days?
You're looking at more than 1 out of every 2. And as time goes by and as science gets better, we're living longer lives. And that doesn't necessarily mean the quality of our lives is that great towards the end of our life, but we're living. We're just living longer. And we're needing care more often, care for longer periods of time. And it's expensive care. That's just the truth of it.
Yeah. And I think everybody knows whether we're looking at home health care, assisted living, skilled nursing, whatever it might be, the gambit of care is vast and it's expensive. But Gene, I think here's what people want to know today. Because remember, the whole theme of this show is sincere and actionable ideas. If you're just tuning in, backed by popular demand is our long-term care guru, Gene Osman. And Gene shared with us her personal story of why she's involved in curating bespoke solutions for clients of VestGen Wealth Partners when it comes to long-term care. But Gene, if somebody wants to take the edge off and someone wants to partially insure, in fact, Gene, why should people consider partially insuring long-term care as opposed to fully insuring it? And then I'm going to lead us through our options.
Sure. Typically today, fully insuring long-term care is very expensive, but it's not necessary anymore. We all have Social Security. We have pensions coming in. We have money coming in from IRAs, RMDs that we have to take. There's no need to fully insure a long-term care risk. We don't know what exactly the long-term care risk is going to look like, but we do know that we've got income coming in later in life that we'll be able to count on. We know what our income later in life that we'll be able to count on is going to look like, and we can pretty much estimate what the cost of care is going to look like as we get older. So knowing those two numbers, we can solve for the gap. We know what the cost of care is going to look like. We know what we're going to be able to contribute towards that cost of care. So we know where we're going to fall short, and we know how to solve for that number. So no longer do we need to be solving for huge numbers for the cost of care. We're just going to need to solve for the number of where we're going to fall short.
That's it. Let's not overbuy. No one should be out there overselling. We just need to fund the gap when it comes to long-term care. And specifically, if you're married right now, if you've got a significant other in your life, your best friend in life, your new husband, your new wife, your partner, you got to protect from spousal impoverishment. That's the lens through which I look at this. Now, Gene, there's different types. There's traditional long-term care. There's hybrid long-term care. What are the solution that you find is best positioned in this marketplace, specifically to clients of VestGen Wealth Partners, and why?
Typically, the solution that I like the most is something that solves for the issues that we've had with traditional long-term care over the years. The main issues that we've had with traditional long-term care has been that with traditional long-term care, the premiums can go up over time. That's been a big issue. That and the fact that traditional long-term care is typically use it or lose it. Those have been the two biggest complaints we've found with traditional long-term care. So the market has addressed those two issues now. And now we have what they call asset-based or hybrid long-term care. Those are policies where the premiums are fixed. Even if you're paying over time, you can pay over 10 years, you can pay over a lifetime with these policies. You can do pays all the way to age 95 with these policies. And you know that your premiums are going to stay stable. You're not going to see a big rate increase down the road.
So, Gene, let me pause there. So I think what I heard is the two problems that have long existed in the marketplace is, number one, how do you curate a partially insured long-term care solution where you can contractually guarantee the premiums are never going to get up? Because everyone's heard about it. Everybody knows someone who has bought a traditional long-term care policy and the premiums have gone up 50, 75, 100, 200%. That doesn't exist anymore. We are only structuring solutions for those clients where we don't have the risk of future premium increases. Number two is no one should be investing money into a solution that they worry that, boy, what if I die without ever using the care? I don't want my premiums to go to waste. We've also solved for that now with the solutions we have at VestGen Wealth Partners, right, Gene?
That's correct. These policies now have a death benefit where if you don't need long-term care, then upon your passing, a death benefit will go to your heirs.
And I find that so valuable because it allows my best friend in life, my wife, Leslie, and I to partially insure long-term care. Again, partially insure because we've got other retirement resources. And I can be rest assured that even if we don't use the care, odds are one of us probably both of us will, at least the money I put into the policy isn't squandered. It's going to end up into my estate through my trust. That was very important to me. If you want to learn more about long-term care, you can. You should go out to our website, getretiredstayretired.com. That's getretiredstayretired.com, and download our guide, A Short Introduction to Long-Term Care. That's a free guide on our website, A Short Introduction to Long-Term Care, so you can get a primer. And then after you have that primer, get in touch with myself. We'll bring Jean into the conversation and go through an educational journey that leads to an exploratory journey so you too can figure out how you can bridge the gap to protect choice, protect from spousal impoverishment, and work towards solving the avalanche issue in American financial planning today, that being long-term care. Jean, as I bring it back to you, talk a little bit about this. When people have a long-term care policy, are there any tax deductions in exchange for it? Are the benefits that people receive tax-free? Briefly, how does that work?
Absolutely. There is no other product in the marketplace today, the insurance marketplace today, where you can deduct premiums and still down the road receive benefits tax-free. The government wants you to buy long-term care insurance. They don't want anyone dependent on Medicaid down the road. So they're doing everything they can to encourage you to buy long-term care insurance, giving you tax deductions, giving you tax or benefits down the road tax-free. It's a fantastic product. Everything that they're doing that they can to encourage you to buy long-term care.
So, Jean, if I heard this, the government's walking alongside us. They too know it's the avalanche issue in American financial planning. So not only at VestGen Wealth Partners are we curating solutions where the benefits received by clients are tax-free, but there's the ability to take tax deductions along the way. Again, 833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com. Jean, I think I'm going to hold you over for one more segment if you give me that grace. You're listening to In the Know, AM 560, The Answer.
In the Know Radio with Craig Balanas on AM 560, The Answer, where his goal is to pummel you with financial know-how until you say uncle.
All right, we talked earlier this morning that we're here to give you sincere and actionable ideas, and one of those this week is, again, solving for the avalanche issue in American financial planning. That meaning care for mom, care for dad, care for you. It's about advocacy. It's about protecting choice. And I want you to go out to our website and download our publication, A Short Guide and Short Introduction to Long-Term Care. That's download for free, A Short Introduction to Long-Term Care. GetRetiredStayRetired.com, GetRetiredStayRetired.com. So, Jean, when we talked in our first segment about partially insuring a solution, what that means is we don't want to overcommit to insurance. We want to get enough coverage so that our Social Security, our dividends, our interest, our income plan combined with that insurance can protect choice. That means choice, not just for the care we receive, where we're going to receive it, how we're going to receive it, but choice is also about making sure the healthy spouse isn't financially disrupted. They too can continue to pursue life, to live more, to worry less. And Jean, sometimes you talk about reimbursement versus indemnity. Showcase for us why indemnity policies today are resonating with so many of the families that you're serving inside of VestGen Wealth Partners.
Absolutely. Indemnity policies are really unique and they're newer to the market, and they're perfect because they allow for the ultimate in freedom for our clients. They allow you to simply choose care however you want to receive it. Instead of sending in bills each month to an insurance carrier to be repaid for money you've already spent, an indemnity policy just allows you to collect a check each month, and you use that money as you see fit. You hire whoever you want to be your caregiver. It's that simple. You spend that money as you see fit for your own care.
That's fantastic, Gene. So what I hear is not only do we have solutions that answer the two vexing questions about long-term care, which is number one, how do I make sure the premiums never, ever escalate? We can do that today. Number two, how do I make sure that if I never use any form of home health care, any form of assisted living, any form of skilled nursing, even though it's unlikely someone's going to need it for some period of time, we can make sure that the premiums we've invested into the policy aren't forfeited. They're going to come back either through benefits tax-free to us or benefits tax-free to the estate. You also just said that we don't have to deal with reimbursement anymore. We can do cash indemnity, which means we can pay a loved one, an adult son, adult daughter, daughter-in-law, whoever it is, to provide that care in the same way we could pay a licensed caregiver. That's about protecting choice. That's freedom and autonomy. That's what America is all about. Gene, 833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. Download our guide, A Short Introduction to Long-Term Care. Gene, can you tell us about a family, anonymously here, that you recently solved for? What were they looking? How did you figure out the solution? And what did it do for them?
Sure. I recently worked with a family where this family couldn't afford a ton of coverage. And I saw how important it was to the wife to get the coverage. And it was a single woman who was buying coverage for herself, couldn't afford a ton of coverage, but she really wanted a plan. And we applied for her, we got the coverage, and I was just curious as to whether or not, and not buying a ton of coverage, whether or not this was really going to be meaningful for her, whether or not it was really going to be worth it. And in my thinking about it and kind of going back and forth, eventually she stopped me and she said, Gene, it's okay. This is what I want. And it's really important to me. And then she stopped and said, Gene, when the day comes for me to need care, as a family, we've already discussed this. And my daughter-in-law is going to probably be my primary caregiver. But if I can buy this long-term care plan and it gives us the freedom to be able to hire a caregiver to come in for maybe 20 hours a week, what will those 20 hours of freedom mean to my daughter-in-law when the time comes? And that really struck me. That really made an impact with me, in that she was really thinking of the health and well-being of her family, in that her daughter-in-law is willing to be her caregiver, but she's really thinking of what's the best thing for my family. And that respite time, that time of giving at least 20 hours off for her daughter-in-law to be able to do what she wants to do with her life and bring in formal caregivers. It made me realize that there is no too small of a dollar amount. There is no too small of amount of care to pay for that isn't worth it, that isn't going to make a difference in someone's life. There's no too big a benefit, no too small a benefit that isn't going to make a difference in my clients' lives.
Yeah, Gene, that's an awesome story. And you know what? That resonates with me. It resonates with everybody who is listening, because it allows someone to speak a story, be vulnerable, and just say how it's creating that peace of mind. And for you to be a surrogate to solve for that, it's got to give you just such tremendous pride, doesn't it?
It absolutely does. It makes me realize that I'm here for a reason.
That's right. And if you want to connect with Gene, 833-964-PLAN, 833-964-PLAN, getretiredstayretired.com. Gene, something you've helped us do over the years is there might be clients out there who had purchased, annuities. And in some cases, these were non-qualified annuities that were not part of an individual retirement account. And the benefit is maybe someone bought that annuity from an agent they saw somewhere at church, at a library, at a dinner seminar, and they've just never taken withdrawals from the annuity because they don't want to pay all the taxation. How can we leverage one of these old legacy annuities that maybe someone bought into something that's going to have a very meaningful and positive impact?
That's a fantastic question. And it really comes back to the Pension Protection Act that, again, is there through the government for our benefit. We can take an annuity that has gain inside it that you would normally be paying the taxes on first if you did start taking withdrawals from it. We can put it into a long-term care qualified annuity. We can double or triple the value of that annuity, if not do a little bit better than that. And if you take the money out of that annuity for long-term care, there is no tax on any of it. Again, that is the government wanting you to use long-term care dollars, wanting to encourage you to buy long-term care. They're going to let you take an annuity with gain in it, put it into a long-term care annuity, and if you take the money out for long-term care, there are no taxes on that money.
Jean, that's huge. And I think everyone needs to read the room. I'm going to just read the room for us. When the government is explicitly giving you tax deductions to secure long-term care insurance, again, we're only going to partially insure. When the government is allowing you to partner with properly structured policies that pay tax-free benefits, when the government is allowing you to take what could be years or decades worth of tax-deferred compounding in non-qualified annuities and turn it into an insurance stream that's tax-free, do you know what that means? The government's going to continue to have to slowly further and further distance itself from this concept of long-term care. So I'm not saying Medicaid's going to see cutbacks. What's trending in the news? I'm not saying that that's where this is going, but I'm kind of telling you that's where we're going as a country. And if you look at nothing more than age wave demographics and population density studies, that's why this is the avalanche issue. So I want you to take control. I want you not to be disrupted. I want you to choose that story, not just for yourself, but that story for your loved ones. That story Jean just told me, it wasn't about what a woman wanted for her. It's about what she wanted for her family members who love her and are going to care for her. And that's the lens through which she saw this. So if you want to learn more, you can. You want to learn more, you should. Connect with Jean, connect with myself. We're a phone call away. 833-964-PLAN. 833-964-PLAN. Go out to our website, getretiredstayretired.com, getretiredstayretired.com. Download our guide, our short introduction to long-term care, so you can have a primer. And then after that primer, let's visit and go through an educational exercise and an exploratory journey of what unique options are there for you, solving for all of the things that we need to solve for, making sure premiums never go up, make sure that you have the opportunity to have home healthcare, assisted living, skilled nursing, making sure that it's never use it or lose it, that the premiums you invest will always be used either for care or for your estate, how to curate this for upfront tax deductions in addition to tax-free distributions, create that leverage. That's what we've always done at VestGen Wealth Partners, and that's what we stand ready to do for you. All right, we're going to pay some bills, do a commercial break. You're listening to In the Know, AM 560, The Answer.
More In the Know Radio. You want more In the Know Radio? You can't handle more In the Know Radio. Okay, yeah, you can. And it's on AM 560, The Answer. Welcome back. Here's more with Craig.
So we spent our time talking about that avalanche issue in American financial planning, solving for the gaps of long-term care. Now we got to bring it to the other side of the equation, which is we need to start by redefining indexing. That's right, redefining indexing. Last time I checked, it is no longer the 1970s. It is no longer the mid-1990s. We have evolved to the third place where the concept of indexing works, because when you compare participation in markets with tax deductions every single year, that has the potential to not just revolutionize the industry, it has, but to increase your after-tax returns, because after all, you can't spend what you can't keep. David, give us an intro and a primer again on direct indexing and how it can benefit all of those who are out there trying to get retired and stay retired.
Yep. So step one, choose the index that you would like to replicate, whether it's the S&P 500, the Wilshire 5000, etc. Now, as you always say, Craig, right? If you own all 500 stocks in the S&P 500, don't you think that those 500 stocks would perform like the S&P 500 ETF? The answer is, yep. If the allocations and weightings are correct, they're probably going to have the same pre-tax performance. On an after-tax basis, the opportunity set is different, because if you own the individual stocks, which is what a direct indexing strategy is, and you have market volatility like we had in April, wouldn't it be great to take a tax loss on those losing stocks in that month that the market fell? And so I think the takeaway is, if you want to take your game and level it up, then what we want to focus on is how can we improve some of the basics? There's nothing wrong with indexing, but if we can couple indexing with better after-tax returns, which are documented several hundred basis points higher depending on your tax rate, that's what we need to look at. And so if you're a business owner out there, or you're a real estate investor, and you are going to have liquidity events, think of implementing this now, several years before your liquidity event, because the benefits of direct indexing are not solely just after-tax investment performance. It could be after-tax investment performance that falls into avoiding taxes on sales of appreciated real estate or companies.
David, that's exactly it, because some of the most common stock indices that people can replicate with an index mutual fund, some of the most common stock indices that people can replicate with an exchange traded fund, boy, in 2019 and 2020 and 2021, there were double-digit returns. 22 might have been a bad year, but there were double-digit returns in broad-based stock indices in the United States, again in 2023 and 2024. And when you own the stock index mutual fund, or you own the stock index ETF, you get the performance that you wanted of that index, but you don't get the opportunity to loss harvest and sell the losers. And again, David, even though markets may have had double-digit returns, as evidenced by the S&P 500 in those years that I just read, does that mean that all 500 stocks went up?
No, of course not.
No, of course they didn't. So when stocks go down, even though the index is up double digits, you want it to be able to loss harvest those individual stocks. And you can only do that by direct indexing your way to success. So what do you want to do? You want to learn more. 833-964-PLAN. That's 833-964-PLAN. Go out to our website, getretiredstayretired.com, getretiredstayretired.com. And remember, everybody, indexing a portion of your family's retirement money makes all the sense in the world. And especially when you pair that indexing with tax benefits, now we're creating leverage. Because remember, those tax deductions can be used to offset your current income up to $3,000 per year. Those tax deductions, to the extent that they exceed $3,000 per year, they're not forfeited. They go into the tax loss piggy bank, and you can unlock them in future years when you have larger capital gains from making great investments. Maybe you have a larger capital gain from the disposition or sale of real estate. Maybe you have a larger capital gain because you have a liquidity event at work, or you actually sell the business. These are all the reasons you want to get started this way. 833-964-PLAN. Go out to our website, getretiredstayretired.com. But remember, you can't just do direct indexing. You can't just do direct indexing with calendar-based rebalancing. It does not work, because when you're doing direct indexing like other custodians do, not us at VestGen Wealth Partners, you don't get to take advantage of the big dips. David, did the market have a huge dip on March 31st?
No.
No. Did the market go in the tank though during April? Yeah. And if you're only doing calendar-based rebalancing, guess what? You don't get to take advantage. That's why you need to work with firms who use tax optimization. That's optimizers to take advantage of intra-month issues that occur to really enhance your returns. And I would argue pairing that with our custom overlay software to reflect everything else that's in your portfolio to prevent wash sale rules is as equally important. David, anything else all of our listening audience should know about the next evolvement, courtesy of that intersection of research and technology when it comes to direct indexing?
Yeah, I would say direct indexing is not tax loss harvesting, right? Tax loss harvesting is investing 101. Direct indexing is level 201. Direct indexing with an overlay customization is level 301. And if you're stuck in those first two tiers, and maybe you're not disappointed, but you're just thinking to yourself, like, is there actually a better way to do this? I think we're here to tell you there is. And is it worth 45 minutes of your time to just have a cup of coffee and a conversation to see if that's right for your family?
833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com, getretiredstayretired.com. Now, David, we've talked time and time again over the last 5 months that our theme for the year was pragmatic optimism. And I still have pragmatic optimism based on the weight of the world that's here. But with pragmatic optimism, I think it's equally as important, even though this is a play on words, for people to really start diversifying their diversifiers. Everybody knows, well, at least I hope they do by now, that the only free lunch when it comes to investing is diversification. But David, what are alternative investments? How have they evolved over the last 15 years to be a client-first mentality now? And what are some of the alternative investments that people should consider? We're going to talk a little bit about that first part, and then we'll talk about the implementation after the commercial break. But David, what is an alternative investment today?
Yeah, I mean, this typically the way we view it on our team is non-publicly traded assets, right? So not a mutual fund, not a stock, not an ETF. Now, that involves lots of categories. Category one might be real assets, and a popular example of that would be real estate. The difference between real estate private versus real estate public is if you have a ETF that's invested in real estate, those are still stocks, right? So how much diversification are you getting? The market sells off. We want to indirectly own the actual physical real estate because I think there are benefits long-term of doing that. Direct lending is another opportunity in the private markets, right? Lending to PE firms that are acquiring companies or lending to big cap companies who might not be able or willing to wait for underwriting from the bank. And then PE itself, private equity, is your other opportunity set in that alternative space today.
That's right. So whether it's private credit, direct lending, whether it's real assets like real estate, or whether it's strategic capital, all of those are various forms of alternative investments that are true diversifiers that you can use to diversify your diversifiers. And I know you want to learn more. We're going to talk about it after this commercial break. You're listening to In the Know, AM 560, The Answer, Craig Bolanos, VestGen Wealth Partners.
Knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560. The Answer.
So we're talking about diversifying your diversifiers, and one of those ways is to participate in real assets, right? Real estate, whether it's done on a net lease basis, a credit basis, or even digital infrastructure, right? I mean, the digital infrastructure piece, focusing on acquiring financing, developing, and operating data centers and related digital infrastructure assets. I mean, I think that is truly exciting given it's NHL playoff season. That's a concept about what? Skating to where the puck's going to be as opposed to skating to where it goes. When I think about real estate credit, investing in a strategy of competitive finance solutions, that's another way to get it done. And then net lease, that's focusing on acquiring what I call single tenant freestanding properties, primarily focused in the areas, though, of industrial, healthcare, essential retail only, and data center sectors that are, again, net leased, long-term, investment grade, credit-worthy tenants. That's the way. Or maybe you don't do a singular area, you participate in all three, because real estate can be a great diversifier. Not only do we have an income stream, not only do we benefit from depreciation, we have rent escalators. There's so many components. And I begin by saying again, do not expect the last 7 years of U.S. stock market returns to look like the next 7 years of U.S. stock market returns. And that's why I'm shouting that everyone should be diversifying. David, away from that, talk a little bit about the concept of why somebody might want to not just do real assets, real estate, but someone might want to do private lending or private credit.
Well, I think that we would all agree that some of these bigger stock themes from the last few years aren't going anywhere. So AI and software are a great example of that. But as an investor, your avenues to participate in those long-term themes are not limited to just the equity side of things, right? What happens if you're a lender to those companies and those companies are paying you above average income? I mean, that's at the end of the day what some private credit offerings allow you to do. It allows you to participate in all of these companies that might not be publicly traded yet. And if they're going to pay you twice the yield of the Fed funds rate, that's, I think, very appealing in this market where there's so many uncertainties. And I think really at the end of the day, that's the way that people need to think about all of these alternatives, which is it's not an either or, it's just you have access to all these other investments. It's whether or not you've ever been presented with the opportunity set to actually participate. And step one for a lot of families is you just don't know what you don't know. So you got to get educated first. But I think that that's the way I would think about it. This has nothing to do with selling your large cap tech stocks. It has everything to do with, hey, is there a different way we can participate in some of those long-term themes? The answer is yes.
Yeah. And I think the other area besides real assets, besides direct lending, private credit, is that pure play private equity space, what I call strategic capital. And when you think about that concept of strategic capital, you've got to find a way to be properly diversified. And whether you're using an evergreen structure, whether you're using a drawdown structure, the bottom line is this. You need to be in a position where you can have access to accomplish your goals, whether that's primary investments, co-investments, secondary investments, and again, not doing it in a mutual fund or ETF wrapper. You don't want to be in shiny objects. You want to be in the real stuff that you qualify for based on your net worth. And we at VestGen Wealth Partners stand as a gateway to unlock that for accredited investors, qualified clients, and qualified purchasers. If you want to learn more, you can. 833-964-PLAN. That's 833-964-PLAN. Go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. And a big reason we talk about this is there was a point in time that IPOs happened all the time. But pause. Think about how many initial public offerings you hear about now today. That's because great companies are choosing to stay private longer, or great companies are choosing to stay private forever. They're not going public. And when you think about all of the leaders in today's marketplace, those leaders in these emerging economies that are transformative because they have created disruption that was bred from innovation. I'm talking about everything in the data center space, everything in the artificial intelligence space. The top companies, they're all private. If you ever want to have a chance to compete and be invested in there away from indexes of public companies, then you've got to use strategic capital as an asset class to even have a chance to get in the game. So David, take this conversation on alternative investments and, put a bow on it. What's the takeaway that everybody should think about at this stage in the market cycle, closing out? We're almost at the halfway point of the year, 2025.
Yeah, I would say if you knew what you knew now back on January 1st, would you have made any slight tweaks at the margins? And if you're like me, where you're always optimistic, but there are challenges on the horizon, this is not the time to completely unwind the strategy you've put in place, but it is the time to have a second look and say, hey, I've already made it. I know my job is to hold on to it. And what are the tools that are available to me that I might not know about? And let's see how we can start implementing those. Because everything that we've just talked about, I view as a stay wealthy strategy. And if you're in that category, you just want to stay wealthy, then let's upgrade your game from level 101 to a level 301.
I think that's perfect, David. That's so well said. So start looking beyond simple stocks, simple bonds. Start thinking about how you can incorporate taxes as an overlay to create leverage. Seek not just public markets, but seek the intersection of public with private markets to further create diversification so your portfolios too can be sustainable and enduring. Because we talk all the time, it's not just about getting retired, it's about staying retired. We understand that. We know what it takes, and our strategies are TNT. They're tested in the trenches. Our website, getretiredstayretired.com. That's getretiredstayretired.com. David, if someone wants to interact with someone on our team, what's that experience going to look like when they reach out through our website, getretiredstayretired.com, or they call us at 833-964-PLAN?
Yeah, if we have the opportunity to meet, whether that's a phone call, a Zoom call, or an in-person meeting, I think the expectation from the end user is we're not going to ask you to bring any documents with you. We don't need your tax return. We want to simply understand what's important about money to you and your family today, what you've already put into place, and where are we trying to get to. And if we have a good conversation, all that's going to lead to is another conversation. We are excellent stewards of capital because we're really good students. And I think that is what we are doing in the conference room is we want to let you know what's out there. And if we're the right fit, then we'll just continue that conversation. But vast majority of folks that we end up engaging with don't have financial flyers to put out. They're directionally correct. They want to make sure they're dotting the I's and crossing the T's. And because things are moving so quickly today, they want a second set of eyes and an advocate for them to make sure that they're doing everything they can to put their family in a position to be successful.
833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. You're listening to Craig and David Bolanos in the know with VestGen Wealth Partners on your favorite station. It's the station with all the answers. That's why we call it AM 560, The Answer.
Ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560. The Answer.
There's a freight train coming. This thing already left the station. And if you don't get out of the way, it's going to cripple a lot of people in retirement. I'm not talking about things that create recessions. I'm not talking about things that create bear markets. I'm talking about the simple fact that we have raised so much revenue in this country, but we continue to spend so much money in this country. We have a population that's getting older. It's called the graying of America. And here's what's going to happen. The biggest obstacle that you're up against is TIR. And David, TIR is what, and how are we going to help everybody who's listening?
Taxes in retirement. Yeah, I think if we look at the trend lines, and we love to show these graphs post-COVID of what our intake is as a country versus our outtake, right? Like spending, you kind of take a step backwards. But to your point, Craig, retirement planning is about matching the investments with the tax return, your estate plan, your Social Security, and your health care. And at this stage in the game, I don't think that you can have one without the other. So if you have a broker or an advisor and every conversation is simply about what mutual fund to pick, probably consider talking to another firm that can start blending these conversations together. This isn't about avoiding taxes completely. It's about making incremental improvements at the margins. And that to me is financial planning. If you can do that every year and you just string together these small victories at the margins, that's how you become an excellent steward of the market. The key is you've got to have someone in your corner to advocate to actually get it done and to take action. And I would argue, to your point, whether it's an investment thing or it's a longer term tax planning thing, now is a fantastic time to go ahead and get that second look. You just got your second opportunity with this market recovery that we've had, but who knows if this is going to be a V-shaped recovery, a W-shaped recovery. But if you're one that's leaning the other way, I would consider doing it now.
That's right. You always get a second chance to do the right thing. 833-964-PLAN, 833-964-PLAN. Let us help future-proof your retirement. That's right. Let's future-proof your retirement. Connect with us online. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. You're listening to Craig and David Bolanos, VestGen Wealth Partners, in the know, AM 560, The Answer.